So what's going on, everyone? Welcome back. This is part 4 video of our price action series video. So today I'll be showing you the part 4 of price action we have been learning. Last 3 episodes we have seen the basic things, how to trade, how to use our strategy, the simplest strategy that we use everywhere in currencies, cryptos, boom and crash, and stock also in futures. So today I am going to analyze the market of boom 500, 1000, crash 500 in as well as crash 1000 from last week. So I will start from November 17, I think. So we will analyze the market together. We will see what happened last week and this week. Plus at the end we will also see what is really happening right now in the market. So even though today's Thursday, we have 2 days left for trading because we are not going to trade on Sunday. We take off on Sundays, so we will see what is happening in the market from Monday to Saturday. So we still have Friday and Saturday to trade on, so we will see what is going to happen. We're not gonna predict, but we will react to the market whenever we see good setups. So I will start analyzing market from boom 500. This is chart of boom 500 on 1 hour time frame. So most of the time I prefer doing analysis on 1 hour time frame. Sometimes I go to 4 hour and daily to see the bigger picture of the market. But let's start from 1 hour and let's knock it out. This is boom 500 on 1 hour. So I'll start from November 15th or 17th, around this place. So here, if you see this big move, market was bearish like 12 bars for about not actually 12 bars. Let's measure it correctly. Starting from this 20 bars. So 20 bars means for 20 hours boom 500 was going down, a straight down without any green candlestick. So what really happened before this bearish momentum? So if you see this area, we have a kind of M setup. I think you know what M and W setup means. If you start trading from the basic concepts, everyone in YouTube will talk about this setup, M and W setup. So most of the time market creates this kind of wavy pattern. This is the basic thing that you know as support and resistance. If you see this M picture right here, we have market going up, then bouncing down, and again going up and bouncing back again. So it created M shape, right? So what do? We have 2 equal high points here. That means we connect those higher points together and we get a resistance, right? So the thing that we know behind this M is we have a resistance at the top higher points, and at the lower point also we have market reversal at this point. We don't know what happened here. Maybe the market came from the lower side, or maybe the market was consolidating from the upper side. Whatever the case is, we have support right here because market bounced at this point, right? So if we are at this point, like let's say the market is playing at this area and we want to buy or sell, what is going to happen? We have got M shape and we have resistance and support. So the next step will be waiting for the market either to break or give you confirmation for bouncing up. So sometimes if you see some kind of big rejections at this support area or any kind of chart patterns like maybe descending triangle or flag, maybe bullish flag or symmetrical triangle or any kind of chart patterns, if you see at the support area, wait for the market to break that chart pattern. So as soon as it breaks, since you have 2 solid reasons to buy, you go for a buy. And if the market also breaks this area, you take immediate action or you wait for another confirmation, right? If you enter immediately after market breaks this support level here, let's say you sell here, so you can put your stop loss just above these rejections or this support area. That means you measure the point, you calculate your equity, and you calculate the amount that you can afford on this trade, then you put your stop loss. So after these kind of shapes, let's go and see what happened here. We have M shape here. You see this, right? Market went up, then came down, went up, came down. So We got full M shape, right? So we do what? We connect our support, means the points where market has reversed its direction. Market came down here and got rejected or reversed its direction here at this point. Then again it tried to come back and there was a big rejection. Market reversed it back again. That confirms this level is a support area. This level is a confirmed support area. So we wait for the market to come back again to that point and give us something, either confirmation either to buy or to sell. So while waiting, we got shape here. I don't know if you see this area. If you connect this rejection, if you connect this big rejection with this higher point, we get a triangle, right? So we have a triangle. Market went up, came down, got rejected here. So we have 3 rejections in this level. This black support level is a confirmed support level. So we wait for the market either to break up or down, because since we have a support level, if price breaks from this triangle in upside direction, you take a buy, you take a trade, you take a buy position. And if it breaks downside, that means there is a momentum for the market to go down, because it has been playing at this level for a while. It has been rejected 3 times. So finally, if it's able to break that point, that means behind that market there is momentum. So we gotta take that advantage. So while waiting for the market to break, we've had this big red candlestick. So after this, the market broke, and there is, if you see, let's zoom in and let's see. If you see this small green candle, if you see this small green candle here, market tried to go up a little bit, then it got rejected down. So if you are patient enough, after this green candlestick, you confirm that the market has no momentum to go up again. So it was right, it broke downside. That means it's good to go for sale. So you sell here, you follow the market, or whatever your plan is, you go for it. So let's say you get stopped out around this point in this green candlestick. How much would it be? 267 points. I guess that's around 26 means on 0.1 you make $26. On 0.2 lot size, that will be around $42, around $52. On 1 lot size, that's $100. So you make money here. We got 1 win at this point. All this was a win. So let's say you got stopped out here at this point, since you use trailing stop loss. Okay, some of you have been texting me how to trail your stop loss. Sometimes please post to trail your stop loss. The reason I don't do that is we have the traders with small account and big account. I've tried to mention this in one post, I think, because some traders, they have more than 1k in their account, and some traders, they have less than $50 in their account. So if I tell all of them to trail their stop loss and follow the market, if there is one spike, the guy with small account will be stopped out easily, because his stop loss will be tighter, right? So for the guy who has more than 1k, if he's trailing the stop loss or keeping it there, it doesn't matter, because he is giving the market to play. Sometimes market plays, goes like up and down, goes up and down, plays around, then goes in your direction. So that's why I don't want to trouble you. Just calculate your equity, balance and everything, see with your plan. If it goes with your plan, go for it. Trail your stop loss. If not, don't touch the stop loss. Just keep it there. If market kicks you out, it's okay. We're not magicians here, okay? We're not winning every day. We're not winning every trade we take. There are losses. We trust in the process. We are improving. We are learning from our losses. Look, let me say this thing. If you are here in my trading school for only signals, I'm sorry for you. I mean, you're gonna be dependent on me forever. That's not cool. I don't want that. I want you to learn how to trade, okay? That's my dream. I mean, that's my target. I don't want you to pay me every month. I don't want you to pay me for lifetime. Yeah, pay for lifetime, it's okay, but that should be for learning. If you're gonna keep taking signals like forever, man, that's not cool. You have to learn how to trade. That's why sometimes I'm challenging you. Some of you are texting me like charts, you analyze the market. I appreciate that, mates. Keep it up. Analyze the market, take screenshot and send it to me. Sometimes I learn from you, I swear. That's the real thing. Sometimes some students send me screenshot and I see, wow, I didn't see this picture. I mean, nice view. Like, I appreciate them. So keep doing this thing. Now let's move on. After getting stopped out at this point, market went up immediately. Like, we had no chance to buy. Maybe at this area, if we go to 30-minute or 15-minute time frame, we may get opportunity. Let's see if we have something there. Sorry, we went back. Yeah, so at this level, we know that the market was getting rejected at this point and was able to break this horizontal level. That means the market is in a bull market. Then we had a little consolidation here. Let's put a box at this area. Let's put a box here and let's see what happens. You see, so you know the market is in a bull, right? Market is reversing, market broke this level here, market is creating higher highs and higher lows. So you wait for opportunity to buy, right? So you don't buy, you don't put a buy position blindly. So you wait for the market to give you some good setup. So this is a good setup. We have a consolidation, we have a box. Market is going up, coming down, going up, coming down, and a little bit of disturbance here. So you wait for the market to break this level, and if you go to 15-minute chart, still we are going back. So I'm sorry it is taking too long. Yeah, so if you see here, after this consolidation on 15-minute time frame, market was able to break up. Let's say you take an entry here, you take an entry here at this point. If you buy at this level, right, after this candlestick closes, this will be a win for you. So you put your stop loss inside, maybe at the midway from the box, then you go all the way up following the market. Since this is boom, that will be a spike, right? So all these spikes, that's about how much? Oh, $8 or 0.1. Yeah, it's okay, small win, but still win. 0.2, that's $16. So another win. After this one, we know the market has reversed its direction and the market is in a bull run. So we are looking for buy entry, right? So in episode 3, I guess, we have talked about buying a market which is in uptrend and selling a market which is in downtrend. Sorry. So if the market is in uptrend, always look for buy opportunities. Every setup you see, take that setup for your advantage to buy the market if it's in a bullish market. If it's in a bearish trend, so every trend, every setup or chart pattern you see, take that chart pattern for your advantage to sell the market. So now we are on a bull run and we are looking for buy. So after this second win, we wait for the market to give us another setup. Now let's clean our previous support from this level. If you see this area, market is coming back, getting rejected from the same level, same point. So we absorb this area and put a support level. So